Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? Well, it's just a debt payoff strategy where I do Excel sheets and it somehow allows me to make 200 bucks a month, at least on YouTube. Take a look at that. I make $200 a month doing spreadsheets. And yeah, that's one part of it. It's a making money scheme for me. And then another part of it is it's a cult recruitment scheme for me. And in fact, if I go to my comments and I look for the word cult, everybody wants to be a cult member. And never even met these people in real life. You have spoiled us, great leader. We anticipate daily videos. We are a cult. It helped me. Oh, this person's not in a cult. I'm disappointed. Um, the cult is growing. The funny thing is, you are being very conservative with your numbers. As a member of the cult, she is living my dream. So yes, it is an excuse to recruit cult members into this thing called Korean Atlanta Mentorship. And I know that if I go to sleep tonight, and I'm kind of really sleepy right now, the cult member subscribers will grow by one, and it'll be 3,900 subs. So let's get to it. What's velocity banking? All it is a debt payoff strategy where you throw all your money into something called a line of credit. In fact, it's so easy that I just do this in my sleep. Remember how um Captain America's like, I can do this all day. It's kind of like my version of that. Instead of saying like I could do this in my sleep, it's just I can do this all day, right? Well, actually, that's what Cap would say. By the way, is anybody watching that new Captain America movie? It's going to come out in like 2 weeks. Can you believe it? I feel like there's no hype for it. Um, by the way, my favorite Marvel movie is The Winter Soldier. That one or the Black Panther. I really like those are my favorite standalone Marvel movies, and I actually like Shang Chi too. That one's good. Random comment. Like I don't know if you ever watched Shang Chi, but did you notice that Shang-Chi is like Black Panther in reverse? Like Black Panther goes to the ancestral homeland and he gets welcomed. And then and then like America's like the bad guy in the first Black Panther movie. But then like in Shang-Chi, America's like the good guy, and then like the ancestral homeland is like the bad guy. Kind of weird, right? But it's they're both good movies. All right, so let's go ahead and get started. So velocity banking, all it is a debt payoff strategy where you throw all your money into debt with the help of a line of credit. And all you need to do for velocity banking is just do a budget. Have you ever done a budget before? I've done a million of these, and these aren't even like mine. These are just fake ones I created. So, what you do is you list the income, you list expenses, and you list every single debt that you have. So, maybe one credit card, two auto loans, a student loan, and a mortgage. And then you have your general expenses, $2,500 a month, food, gas, insurance. So, we just lump everything, okay, that is not debt into this little bucket right here. What's a good font or background for that? I don't know. Orange? I won't even do it. All right. So next thing is we need a line of credit. And our line of credit is going to be what we call our main operating account. And it doesn't have to be huge, right? But I got tons and tons of credit right here, $280,000 in lines of credit, 280,000. So, what is a line of credit? All it is a financial tool where you can borrow money, pay back, and use it over and over again. And in fact, I actually don't have just 280,000. If I combine all of my lines of credit, it's 579,000. 579,000. Okay? And so what is the secret to getting all these lines of credit? Well, it's you got to get it when you don't need it, right? Cuz banks don't lend money to people who need it. And the cool thing about lines of credit like this is like I could literally just go to a bank's website, click a button, and then it will just spit out money into my checking account at a 7.5% interest rate. Is that crazy? I never knew that these kinds of things existed. And so let's go ahead and pay off some debt. So we copy our income, we copy our expenses, and here's the magic to this. We don't save money, okay? Say no to saving money. And what does that look like in real life? Well, basically when you got your bank account, you just don't have any money in it. Money comes in, it goes to the line of credit, and that's where it stays until you gotta pull out your money to pay your bills, which is for me mostly credit cards and loans, right? So you can't pay a loan directly with the credit card, but I pay with the line of credit. Okay. Now, this is what we're going to do. We're going to pay off debt. And the easiest way to figure out which debts to pay off first is the credit cards, right? When you move a $27,000, 26% loan into a line of credit, that's a no-brainer. And guess what? When we do that, this payment goes to zero, right? And then what we're going to do is put our entire paycheck, this $5,500, into the line of credit, take our expenses out, and then rinse and repeat over and over again, right? So let's go ahead and do this. All right. So I'm going to do this. So G2 plus H2 minus 1087.79. And then what we're going to do is take the average daily balance, right? Average daily balance. That's how we calculate the interest, multiply by the interest here, and then divide by 12. And then I'm going to go ahead and copy and paste. And then this is the final step. Paycheck goes into the line of credit, expenses out, and then our cash flow here is going to be used to reduce the balance of the debt every single time. And we got to pay the interest as well. So let's go ahead and do that right here. And we see that in 28 months, we're credit card free. Look how easy that was. All right. So we just got this one gigantic credit card. Although I don't know if the bank would give it to you like that. Actually, what's my biggest credit card? It's probably 33 grand from American Express, right? American Express is pretty general in my experience with limits. 33 grand. And, I think the strictest lender I've probably dealt with is like Wells Fargo, Bank of America. Chase has been very generous to me, but I don't know what it is, but like I heard like the big banks in general are kind of stringent or stingy. I don't know if that was the right word, but so far Chase has been pretty generous to me, but Wells Fargo and Bank of America, they haven't given me that much, but it's okay. All right. All right. So now it's 28 months. So let's go ahead and type this in our loan calculator. And so let me just kind of do this here. So 28, 28, 28, 28, right? Is that right? 28? Okay, 28. So 28 is a current month. And then what we're going to do is we're going to pay off the auto loans first. So if you don't know how amortized loans are calculated, all you need is three factors, right? The original balance, the interest rate, and the term of the loan, and it'll spit out a monthly payment. Okay. And then when you have the monthly payment, you could type like, what's the current month? And then it'll give you what they call the future value. Like after a certain number of months, what's the value of the loan, right? And you can also calculate the amount of interest you paid so far. And so right here, what we're going to do is at this point, we're going to dump these loans into the line of credit, okay, so that we can get our cash flow, right? Because think about this. If I focus on paying off, let's say this student loan, I only get $222 back in my cash flow, right? If I focus on paying this one, I get 386. So we want to get more bang for our buck. And we certainly don't want to focus on this 190,000 because we only get $843 back in our cash flow. So use this thing called the cash flow index. The lowest numbers we pay off first, right? So we're going to go ahead and do that. And I'm going to go ahead and copy and paste. And so now this 25 grand, all right, so let's go move that here. And I'm going to move the 25 grand. Am I even on the right sheet? Oh, did I screw up? Oh, geez. I kind of did screw up, didn't I? Oh my goodness, I'm so bad at this. Okay. Let me do this one more time. So G2 plus H2 minus what's our current cash flow right now? 1087.79. And then, all right, average multiply it by 0.08 divided by 12. And then, all right, let me try one more time again. So now here, we got to add those two car loans, okay? Those two car loans. So Control V, and then plus 25358.71, right? And so now we've increased our cash flow about $800, right? So let's do that right here. And then now our cash flow's almost $2,000. Literally almost paycheck to paycheck. And look at this, we are killing it. right? Right. So let's go ahead and do this. And I'm just control V, right? So 1934.75 and copy and paste. And then we see that in 42 months, okay, 42 months, this has been paid off, right? 42 months, 42 months, and it's 27 plus 20 plus 25, and it's 72K, right? $72,000, 72K, all right. And then now we only have two loans left. See how easy it was? So I'm just gonna go here at 42 months. So this is 0, 0, and then 42, 42. And the safest way to pay off a loan that's higher interest, I'm sorry, that's lower interest in your line of credit. So, for example, the mortgage is 3%, but you're using an 8% line of credit to pay it off, is using the chunking method. It really is. Okay, that's the easiest and safest way, right? And so what does that mean? It's just you're taking a piece of the loan and putting it into the line of credit and paying off over and over again, right? And luckily we have this velocity banking calculator here where we just type in the details and then it will do this for us. So I don't really have to think because I'm not that smart. All right, so let's go ahead and do this right here. So 5,500 of income. And then our expenses is everything except for the loan we're trying to pay off, right? Let's go ahead and do that. So it's 3343.21. So 3343.21. And we'll do a $6,000 chunk and we'll do what's the original balance. It's all right here in the loan calculator. $20,000. Not bad for a student loan. I'm not going to lie. 14312.09. 14312.09. The interest rate is 6% for 10 years, and the payment amount is 222.04. All right. And look at that. We paid that off in about half a year. Oh my goodness. That was so easy. All right. So now we do this. It's 42 plus 6. That's 48, right? 48. So 48 months. Okay. And then that's going to be 92K. And then this is going to be 0, right? And okay. So we just do the same thing over and over again. So at 48 months, what is the balance here? 48, 0. Again, so now this is going to be 2,500. All right, so $200,000 is the current balance, 3%, 30 years. And the payment amount is 843.21, 843.21. And what's the current balance? It's 182,520. Okay, 182,520. Whoa, paid off the mortgage in 5.5 years. Okay, that's so great because I don't even know who pays their 30-year mortgage off in 30. So this is now 0. And then this is 48 divided by 12 plus 5.5, right? So that's 9.5 years. And then we are debt free. Whoopee, whoop-de-doo. Whoo, all right. We are the GOAT, the greatest of all time. And why do we call ourselves the GOAT? It's because, okay, I paid off my mortgage in 2 years and 9 months. I can't even believe it when I say it, I'm gonna be honest with you. I feel like a liar for saying this. You ever like do anything like so extraordinary in your life, and then you just tell other people, and then it's like they just kind of zone out and like, huh? That's why I don't tell people anymore that I paid off my mortgage in 2 years and 9 months, except for what do I know? Okay, except let me how do I say this? Except in my YouTube channel. That's like the only exception. In real life, I don't even care. It's like, oh yeah, yeah, yeah. No, no. Listen, I'm struggling just like you. Don't worry. You know that. What was that like movie where or is it a movie? I'm trying to think. Like, there's some sort of story where like rich people just kind of pretend to be poor so they can get along with other people. There has to be a movie like that. Or I feel like I've seen this before so many times. But yeah. So that's really what I'm doing. I'm not even telling anybody I'm mortgage free in 2 years and 9 months. But that's what also makes me the goat, and possibly a cult leader, or maybe not. I have plausible deniability. All right. Well, that's it for today, folks. So I'm just kind of sleepy, and what I'm going to do, hopefully, is sleep so that by tomorrow, By tomorrow, when we look at the analytics, it's going to say 3,900 subscribers. And if I get 3,900 subscribers by today, usually what happens is that someone decides to unsubscribe, right? So you don't want to celebrate too prematurely, but hey, if I do get 3,900, maybe I might prematurely celebrate with the live stream. Only 99 cents for YouTube channel members. All right, well that's it for today. Have a good night everybody, and who knows if I can crank out another video before I go to sleep, but man, I am sleepy. Good night.